Hey everyone, and welcome to the Deep Dive. Today we're going to be crafting an episode just for you about Bitcoin and how it might fit into a balanced investment portfolio. It's interesting because when people think of investments, they usually picture stocks for growth, bonds for stability, maybe a sprinkle of real estate, and some cash tucked away for a rainy day, and then there's that whole world of alternatives, which can be anything from precious metals to private equity. But today we're taking it a step further. We're exploring Bitcoin as part of the mix. It's like adding a dash of something unexpected to a classic recipe. There's the potential for diversification, maybe even explosive growth. But we also need to be mindful of Bitcoin's unique, let's call it personality.
That's a great way to put it. Bitcoin definitely brings its own flavor to the table. And like
Yeah.
any bold ingredient, we need to understand how it interacts with the other elements of the portfolio.
Right. So first things first, can you remind us about the whole concept of a balanced portfolio? I know it's a bit of a fundamental, but it's crucial to have that foundation.
Absolutely. A balanced portfolio is all about managing risk while aiming for your specific financial goals. It's not about throwing darts at a board. It's a strategic mix tailored to your individual needs and circumstances. Think of it as building a house. You wouldn't use only bricks, right? You'd need wood for the frame, concrete for the foundation, glass for the windows. Each material plays a crucial role in creating a stable and functional structure. Similarly, a balanced portfolio uses a mix of assets to create a resilient investment strategy. The exact blend depends on your risk tolerance, how long you plan to invest, and what you're ultimately hoping to achieve.
Got it. So let's bring Bitcoin into the picture. Why are people so intrigued by this digital asset? From my reading, it seems like Bitcoin is this incredible diversification tool. It doesn't always move in the same direction as traditional assets, which could potentially smooth out those market roller coasters. And then there's that undeniable growth potential. I mean, we've all heard stories of early Bitcoin investors turning modest sums into life-changing amounts. There was a time when you could buy Bitcoin for a fraction of a dollar. Can you believe that?
It's true. I remember reading about someone who bought a couple of pizzas with Bitcoin back in 2010. Those pizzas ended up costing him millions in today's value because those Bitcoins skyrocketed in price.
Whoa, that's wild. And then there's this whole idea of Bitcoin as a hedge against inflation. It's like digital gold, right?
Yeah.
Potentially holding its value when traditional currencies struggle.
That's the theory some investors subscribe to. They argue that Bitcoin's limited supply and decentralized nature make it resistant to the inflationary pressures that can erode the value of fiat currencies. However, it's crucial to remember that past performance doesn't guarantee future results, and Bitcoin's price swings can be extreme. It's not for the faint of heart.
Totally. So let's say someone is convinced by Bitcoin's potential and wants to add it to their portfolio. How do they figure out how much to put in? Is there like a magic formula or a recommended percentage?
Unfortunately, there's no one-size-fits-all answer. The ideal Bitcoin allocation depends heavily on your individual circumstances and risk appetite. For someone with a conservative investment approach, allocating a small percentage, maybe 1% or 2%, could be a sensible starting point. This way, they gain exposure to Bitcoin's potential without taking on excessive risk. On the other hand, for someone comfortable with higher volatility and a longer investment horizon, allocating 5% or even more might be justifiable. But again, it's crucial to tailor this decision to your personal situation.
So risk tolerance is key here. But what about factors like someone's age or their specific financial goals? Do those play a role in determining the right Bitcoin allocation?
Absolutely. Someone in their 20s or 30s with a longer time horizon might be more comfortable with a larger Bitcoin allocation because they have more time to recover from potential losses. Someone closer to retirement, on the other hand, might prefer a more conservative approach. Similarly, your financial goals matter. If you're saving for a down payment on a house in the near future, you probably don't want to put a significant chunk of your savings into something as volatile as Bitcoin. But if you're investing for retirement decades from now, you have more leeway to ride out the ups and downs.
It's not just about throwing a random percentage at Bitcoin. It's about strategically aligning it with your overall financial picture. So let's say we figured out the right allocation. How do you actually get Bitcoin into your portfolio? Are there different ways to invest, like different roads leading to the same destination?
You're exactly right. There are several paths you can take, each with its own pros and cons. Let's explore some of the most common options. The most direct route is, well, direct purchase. This means buying Bitcoin through a cryptocurrency exchange and storing it yourself. It gives you complete control over your Bitcoin, but it also requires a bit more technical know-how. You'll need to choose a reputable exchange, navigate the process of buying and selling, and most importantly, set up a secure storage solution, like a hardware wallet. to protect your Bitcoin from hackers and other threats.
Hardware wallets. Those sound intense. I've heard them described as digital vaults for your Bitcoin. Can you explain a bit more about how they work and why they're so important?
Think of a hardware wallet as a specialized device that stores your Bitcoin offline. It's like a safe deposit box for your digital assets, keeping them isolated from the internet and its inherent risks. This offline storage makes it incredibly difficult for hackers to access your Bitcoin. Even if your computer gets compromised, your Bitcoin remains safe because it's not connected to the internet.
So it's like having an extra layer of security, especially important considering how valuable Bitcoin can be. What about folks who might be a bit intimidated by the technical aspects of buying and storing Bitcoin directly? Are there options that are a bit more hands-off?
Absolutely. If managing your own Bitcoin sounds daunting, there are more indirect ways to invest. One option is through Bitcoin ETFs or mutual funds. These are investment products that hold Bitcoin, allowing you to gain exposure to its price movements without the hassle of buying and storing it yourself.
Oh, so it's like investing in a basket of Bitcoin, managed by professionals.
Exactly. You're essentially outsourcing the technical complexities to the fund managers. However, it's important to note that ETFs and mutual funds typically come with management fees, which can eat into your returns.
Okay, so there's a trade-off between convenience and cost. What about investing in companies that are involved in the Bitcoin ecosystem? I've heard of Bitcoin mining companies and blockchain technology companies. Is that another way to get exposure to Bitcoin?
You're on the right track. Investing in Bitcoin-related stocks is another indirect way to participate in the Bitcoin world. You're betting on the success of companies that are building the infrastructure and services that support the Bitcoin ecosystem. However, it's important to remember that these companies' stock prices may not always move in tandem with the price of Bitcoin. Their performance can be influenced by various factors, including their management, competition, and regulatory developments.
So a bit more indirect and potentially less correlated with Bitcoin's price movements. What about those who are looking for a more active and potentially higher risk approach? Are there options that cater to those investors?
Absolutely. For investors seeking a more hands-on and potentially higher return strategy, there are crypto funds. These are managed funds specifically dedicated to investing in a variety of cryptocurrencies, including Bitcoin. These funds typically employ active trading strategies, aiming to capitalize on market fluctuations and outperform the broader cryptocurrency market.
So they're like the venture capitalists of the crypto world, constantly seeking opportunities in this dynamic landscape.
That's a great analogy. However, it's crucial to remember that crypto funds often come with higher fees compared to ETFs or mutual funds, reflecting the active management and increased risk involved.
Okay, so we've got a range of options: direct purchase, ETFs, Bitcoin-related stocks, and crypto funds, each with its own level of control, risk, and complexity. It's like choosing a vehicle for an adventure. Some prefer a rugged off-road vehicle for a challenging journey, while others prefer a comfortable sedan for a smoother ride.
That's a great way to put it. The key is to choose the vehicle that best suits your individual needs and risk tolerance.
Now let's talk about those bumps in the road. We all know Bitcoin can be quite volatile. Its price can swing dramatically, sometimes in a matter of hours. How do investors manage those wild rides? What are some strategies to stay safe and avoid getting thrown off course?
That's a crucial question. And it brings us to the realm of risk management. Because just like any investment, especially one as dynamic as Bitcoin, having a solid risk management plan is absolutely essential. Think of it as having a good set of brakes on that Bitcoin roller coaster. You want to be able to slow down or even stop if the ride gets too intense.
Oh, I like that. So what are some of the essential risk management tools we need in our toolkit?
Well, one of the most fundamental tools is position sizing. It's all about controlling your exposure to potential losses by limiting the proportion of your portfolio dedicated to Bitcoin. Essentially, you're setting boundaries on how much you're willing to risk.
So even if Bitcoin takes a significant dip, the impact on your overall portfolio is controlled.
Exactly. Another powerful tool is the use of stop-loss orders. These are like safety nets that automatically sell your Bitcoin if the price falls below a predetermined level.
So it takes the emotion out of it. You're not panicking and selling at the bottom of a dip. It's a predetermined exit strategy.
Precisely. And then we have diversification, a golden rule of investing. Don't put all your Bitcoin eggs in one basket. Spread your investment across different types of Bitcoin. Or consider a Bitcoin ETF that tracks a basket of Bitcoin-related assets.
It's like having a safety net within a safety net.
Yeah.
I love that. What about more advanced strategies for managing risk like hedging?
Hedging involves using financial instruments like options or futures to potentially offset losses. but it can get pretty complex and might be more suitable for experienced investors who are comfortable with higher-level financial concepts.
Sounds like something we could explore in a future episode for those who are ready to level up their risk management game. Okay, so we've covered a lot of ground here. We've explored why Bitcoin is so intriguing to investors, how to determine the right allocation, the various ways to invest, and even how to manage the inherent risks involved. But what happens when our portfolio starts to drift? You know, when one asset class, maybe Bitcoin, grows significantly faster than others, throwing off our carefully planned balance. How do we keep things organized and aligned with our original strategy?
You're talking about rebalancing. Think of it as tidying up your investment house. Over time, the value of your different assets will fluctuate. Bitcoin, being particularly volatile, might outperform or underperform the rest of your portfolio. Rebalancing helps us adjust and maintain that desired asset allocation.
So if Bitcoin suddenly doubles in value and starts taking up a much larger chunk of my portfolio than I initially planned, rebalancing means selling some Bitcoin and buying other assets to bring it back down to my target allocation.
Exactly. There are two common approaches to rebalancing. One is periodic rebalancing, where you adjust your portfolio at set intervals, perhaps annually or semi-annually. It's like a regular checkup for your investments. The other approach is threshold-based rebalancing. You make adjustments when an asset's allocation deviates significantly from your target. It's more reactive, responding to larger shifts in your portfolio's composition.
So periodic rebalancing is like a scheduled maintenance appointment, while threshold-based is more like calling a plumber when a pipe bursts.
That's a great analogy. Regardless of the method, rebalancing helps maintain your desired risk profile and encourages a disciplined approach to investing.
Got it. Now, before we wrap up this first part of our deep dive, I want to touch on an important aspect we haven't discussed yet, the legal and tax implications of Bitcoin investing. I know it can feel like a bit of a headache, but it's crucial to understand the rules of the game.
Absolutely. Bitcoin, like any investment, comes with its own set of regulations and tax considerations. It's important to be aware of these to avoid any unwanted surprises down the road.
So what are the key things our listeners need to know about the legal and tax aspects of Bitcoin? Where do we even begin to unravel this tangled web?
Well, tax treatment is a big one. In many jurisdictions, Bitcoin is treated as property, not currency. This means any profits you make from selling Bitcoin are subject to capital gains tax. Just like selling a house or a stock, you need to report those gains to the tax authorities. It's essential to maintain detailed records of all your Bitcoin transactions, including purchase dates, amounts, and any associated fees. This will make your life much easier come tax season.
So good record keeping is crucial. And I'm guessing it's also a good idea to consult with a tax professional who specializes in cryptocurrency. They can help navigate the complexities of the tax code and ensure we're playing by the rules.
Absolutely. A qualified tax advisor can provide personalized guidance based on your specific situation and help you optimize your tax strategy. They can also keep you updated on any changes to tax laws that might affect your Bitcoin holdings.
Makes sense. And what about regulations? I know the cryptocurrency landscape is constantly evolving. Are there any regulatory considerations we should keep in mind?
That's right. Regulations governing cryptocurrency are still developing in many parts of the world. It's essential to stay informed about the laws in your region and how they might impact your Bitcoin investments. Things like anti-money laundering regulations, know your customer requirements, and licensing requirements for cryptocurrency businesses can all come into play.
Okay, so it's a good idea to stay up to date on the latest regulatory developments and seek professional guidance when needed. So we've covered a lot of ground in this first part of our deep dive. We've discussed the rationale behind investing in Bitcoin, how to determine the right allocation, the various ways to invest, and the importance of risk management, rebalancing, and understanding the legal and tax implications. But our journey doesn't end here. All right, so in this part, we're going to be shifting our focus to the ongoing aspects of Bitcoin integration, the monitoring, the learning, and the importance of seeking expert guidance. Because let's face it, the cryptocurrency landscape is constantly evolving. New technologies emerge, regulations shift, and market trends can change like the wind. So how do we stay ahead of the curve and make sure our Bitcoin investment continues to align with our goals?
That's where continuous learning comes in. It's not enough to just set up your Bitcoin allocation and forget about it. You need to stay informed and adapt to the ever-changing nature of this space.
So continuous learning is key. Where do we even begin? What are the specific areas we should focus on to make sure we're not just treading water, but actually swimming with the current?
Well, I'd say there are three key areas to prioritize. First, you need to keep a close eye on market trends. What's happening with Bitcoin's price? What's driving those movements? Are there any major regulatory developments or technological advancements on the horizon?
So it's about staying informed about the forces that are shaping the Bitcoin market. Where do we go to get this information?
There are tons of great resources available, reputable cryptocurrency news websites and blogs, industry podcasts. Even social media can be valuable sources of information. The key is to be discerning and focus on sources that are known for their accuracy and unbiased reporting. Avoid getting caught up in hype or speculation.
Got it. So we're monitoring market trends. What's the second area we should focus on?
The second area is equally important, monitoring your portfolio's performance. How is Bitcoin actually performing within your overall investment mix? Is it meeting your expectations in terms of diversification and potential growth?
So it's about making sure Bitcoin is playing the role we intended it to play in our portfolio. What are some key metrics we should be tracking?
You want to look at things like Bitcoin's overall return, its volatility compared to the rest of your portfolio, and how it's impacting your overall risk and diversification. There are various tools available to help you monitor your portfolio, from simple spreadsheets to sophisticated portfolio tracking apps and software. Choose the tools that best fit your needs and comfort level.
Okay, so it's like having a dashboard for your investments, giving you a clear view of how things are performing. Now, the third area you mentioned was continuous education. Can you elaborate on that? What does continuous education look like in the context of Bitcoin investing?
Continuous education is all about deepening your understanding of Bitcoin, blockchain technology, and the broader cryptocurrency ecosystem. It's about staying curious and exploring new concepts, strategies, and developments that can enhance your investment approach.
Got it. So it's not just about staying informed about current events, it's about expanding our knowledge base and becoming more sophisticated investors.
Exactly. The world of cryptocurrency is constantly evolving. New technologies emerge, investment strategies evolve, and the regulatory landscape continues to take shape. By committing to continuous education, you'll be better equipped to adapt to these changes and make informed decisions.
So where do we go to deepen our knowledge? What are some resources for continuous education?
There are tons of options available: online courses, webinars, books, even podcasts like this one. The key is to find resources that are reputable, up to date, and presented in a way that you find engaging and easy to understand.
So it's about finding what works for you and making learning a regular part of your Bitcoin journey. Now, we've talked about the importance of monitoring, learning, and adapting. But let's face it, even with all the information in the world, navigating the complexities of Bitcoin investing can still feel daunting. That's where the value of professional advice comes in. Can you talk about the role of a financial advisor in this context? When does it make sense to seek expert guidance?
Seeking professional advice is especially crucial for those who are new to Bitcoin or feel overwhelmed by the intricacies of cryptocurrency investing. A qualified financial advisor who specializes in cryptocurrency can provide personalized guidance tailored to your unique circumstances and goals. They can help you develop a comprehensive investment strategy that aligns with your risk tolerance, time horizon, and financial objectives. Choose the right Bitcoin investment vehicles based on your individual needs and preferences. Implement appropriate risk management strategies to protect your investments. Navigate the complexities of tax and regulatory compliance. And stay informed about market trends and adjust your portfolio as needed.
So it sounds like a financial advisor can act as a guide and a mentor, helping us navigate the sometimes turbulent waters of Bitcoin investing.
Exactly. They can provide the expertise, support, and peace of mind that many investors find invaluable.
Now, to really bring all of this to life, let's step into the shoes of someone who's considering incorporating Bitcoin into their portfolio. Let's imagine a hypothetical investor, someone like many of our listeners. Let's call her Sarah. She's in her early 30s, works as a software engineer, and has been diligently saving and investing for her future. She's heard about Bitcoin, understands the potential upside, but also recognizes the risks. She's done some research, listened to our podcast, and is now ready to take the next step. She's decided to reach out to a financial advisor who specializes in cryptocurrency to get personalized guidance. What might that process look like? How will they work together to integrate Bitcoin into Sarah's portfolio?
Great question. It all starts with a conversation. Sarah's advisor would want to understand her financial situation, her investment goals, her risk tolerance, and her comfort level with cryptocurrency.
So it's about building a relationship based on trust and understanding.
Absolutely. Once the advisor has a clear picture of Sarah's needs and objectives, they can start to craft a tailored investment strategy. Given Sarah's age, her long-term investment horizon, and her moderate risk tolerance, They might decide on a portfolio allocation that includes a small percentage of Bitcoin, perhaps around 5%.
Okay, so they've established a target allocation for Bitcoin. What's next?
The next step is to choose the right Bitcoin investment vehicle for Sarah. Given her tech-savvy background and her desire to have some control over her Bitcoin, they might opt for direct purchase through a reputable cryptocurrency exchange. The advisor would guide Sarah through the process of setting up a secure wallet, choosing an exchange, and making her first Bitcoin purchase. They would also discuss the importance of security best practices, such as using strong passwords, enabling two-factor authentication, and being wary of phishing scams.
So the advisor is not just recommending an investment strategy, they're also providing practical guidance and support to ensure Sarah feels confident and secure.
Exactly. It's about empowering Sarah to make informed decisions and manage her Bitcoin investment effectively.
Now, once Sarah has purchased her Bitcoin, what happens next? How do they address the ongoing aspects of managing this investment?
The advisor would work with Sarah to implement appropriate risk management strategies, such as setting stop-loss orders to limit potential losses, and diversifying her Bitcoin exposure by investing in a few different types of Bitcoin or using a Bitcoin ETF.
Right, so they're putting those safety nets in place that we discussed earlier.
Exactly. They would also establish a rebalancing plan to ensure that Sarah's Bitcoin allocation stays within her desired range over time. They might agree to review her portfolio annually or semi-annually and make adjustments as needed.
So it's like regularly tuning up your investment engine to keep it running smoothly.
That's a great analogy. The advisor would also discuss the tax implications of Bitcoin investing with Sarah and make sure she's keeping accurate records of all her transactions.
Right. And of course, they would emphasize the importance of continuous learning and staying up to date on market trends and regulatory developments.
Absolutely. The advisor would provide Sarah with resources to continue her education and encourage her to ask questions and share any concerns she might have.
Awesome. It sounds like a true partnership, with the advisor providing the expertise and guidance, while Sarah remains actively involved in managing her investments and her financial future.
Exactly. It's about empowering individuals to take control of their financial well-being and make informed decisions that align with their goals.
Bitcoin really does represent a paradigm shift in the world of finance. It's decentralized. It's digital. And it operates outside that traditional system. And while that might sound intimidating to some, it's also incredibly exciting.
I couldn't agree more. Bitcoin has really brought a wave of innovation and disruption to the financial industry. It's making us rethink traditional concepts of money, value, and ownership. And honestly, it's not even just about Bitcoin. That underlying technology, blockchain, it has so much potential to revolutionize tons of industries. Think supply chain management, healthcare, even voting systems.
It really feels like we're at the start of a brand new technological era, and Bitcoin is just the beginning. So as we wrap up this deep dive, I want to leave you with a thought-provoking question to ponder as you continue your Bitcoin adventures. Imagine a future where cryptocurrencies and blockchain technology become woven into the fabric of everyday life. How might that change things? How might it impact traditional financial systems, investment strategies, even the very concept of money itself?
Wow, that's an incredible question. It really makes you think about all those possibilities, both the exciting ones and the potentially disruptive ones. I mean, we could see a future where traditional banks and institutions play a much smaller role, replaced by decentralized platforms and those peer-to-peer transactions we talked about earlier. And who knows what new investment opportunities might pop up, fueled by blockchain tech and offering greater transparency, accessibility, and security. We might even see the very definition of money change, as digital currencies become more widely accepted and part of our daily routines.
It's wild to think about how this future is being shaped right now. And it's up to all of us to explore it, to understand it, and then decide how we want to participate. Remember, this deep dive was just a tiny taste, a starting point for your Bitcoin journey. Keep learning, stay curious, and embrace all those amazing possibilities that lie ahead.
Thanks for joining us on the deep dive. And until next time, happy investing.